Today we are going to cover the topic of national income. National income is the topic which explains the development of India when we compare the details of different years. We can notice the development trend by studying national income trends. In national income, first what is the meaning of national income and different concepts of national income and determinants of national income, measuring methods of national income, difficulties and importance of the national income. These are the topics covered. In that part, we are going to start with concepts of national income. And when we started calculating national income in India, before independence, after independence. Before independence, first time 𝗧𝗦𝗔𝗧 𝗧𝗧 has estimated our national income in the year of 1868, and so many economists individually they tried to estimate the India's national income. 𝗬𝗫𝗓, 𝗧𝗦𝗃𝗃, 𝗕𝗫𝗃𝗏, Professor 𝗕𝗫𝗃𝗏, and all these are tried individually. After we got the independence, our government constituted one national income estimation committee in 1949 August under the chairmanship of 𝗵𝗵𝗎, and members are Professor Dr. D.R. Gadgil, Professor 𝗕𝗫𝗃𝗏. These are two members, and 𝗵𝗵𝗎 is the chairperson. For this National Income Estimation Committee, first time the report submitted by this National Income Estimation Committee in 1954. First time report submitted in 1954, and now CSO is the estimation committee, estimation national income estimating. We will go with the GNP. GNP means gross national product. Gross national product or national income. Meaning of the national income: the final value of goods and services which are produced during the year in a country is called national income. We can say national income or gross national product, both are same. We will make it clear later what exactly national income in what is the term we use for national income. Okay. This is the gross national product, the final value of goods and services which are produced during the year by nationals, by nationals. Why we are using national means? Why we are nationals means they are producing goods and services not only in the domestic boundaries of our country, but also maybe in other country also. The difference between GNP and GDP we will make it clear later. GNP, gross national product. What are the components in this consumption? Consumers, what they are spending on these consumer goods comes under this category. Consumption, C, and domestic investment, spending the amount on capital goods, not for current consumption, but for future consumption. This is the domestic investment. Government expenditure on goods and services, net income, that is x minus m. These are the components inside the gross national product. We can write in the equation form C plus I plus G plus x minus m. C means consumption of the goods and services. Here domestic investment, spendings on the capital goods. Government expenditure, government do expenditure on providing services. Government also spends some amount on goods and services, that part comes under this government expenditure. Net income from our foreign, that means some goods produced by our country, we will sell that goods to foreign countries, that means exports, and whatever the goods and services available comparatively cheaper, we will buy from other countries, that is imports. Difference between these two, these are the components in gross national product. Then we will go for GDP, gross domestic product. Difference between gross national product and gross domestic product is this part, x minus m. In this part, consumption plus investment plus government expenditure will be there. That means the final goods and services, value of final goods and services which are produced in the boundaries of our country. We are not taking the products produced outside the boundaries of our country. That means gross domestic, is the word, it is stressing on the boundaries, within the boundaries of our country. N, that is gross national product, national, N, it is giving nationals, Indian nationals, wherever they are working, whether they are working inside the country or outside the country, that part will be added in this part. Here only the amount we are taking, adding in the GDP is within the boundaries of our country. That is the difference between these two. Here nationals are working inside the country and as well as outside the country. Here in this only inside the country, that part only we are taking, that part only we are covering in this C plus I plus G. The difference between GNP and GDP is only x minus m, this part. Question may be asked like this in competitive exams. What is the difference? Exactly directly they will not ask like this, what is the difference between GNP and GDP, but which of the following is correct, like that they will ask. In options they will put GNP means like that they will ask question, and options, one is C plus I plus G, another one is C plus I plus G plus x minus m, and another option C plus I plus G plus x minus m within the bracket, and like this they may ask. We have to exactly find out this should be within the brackets. Why? Because net income we are taking. Net means the difference between exports and imports. Net income is positive, then GNP will be greater than GDP. If net foreign income is negative, then GDP is greater than GNP. Which one is greater than which one, like that they may ask GNP is greater than GDP in these circumstances, like that ABC, like that they may ask net income negative, net income positive, or like that they may ask in competitive type exams. After clarity over this concept only we can decide what are the components inside the GNP, what are the components inside the GDP, what is the difference between GNP and GDP. After having this clarity in this, then we can give answers like this. At least 2 questions may be asked in this national income part. We do not know about exactly how many questions may be asked, but the intensity of the topic is like this. Which one is greater than which one, like that. What is the difference between these two? If a person working outside the country, his income is added in domestic GDP, that means gross domestic product, like that they may options will be given in that. That outside a person is working in outside the country, his income is added in GNP. This is the difference between GNP and GDP. Question will be asked what is the difference between these two, and what are the components inside the GNP and inside the GDP. Here the foreign income is not added. The Indian nationals working in the outside country, their income is not added in this GDP. In GNP, here it is added. Here the nationals, Indian nationals, wherever they are working, all their income is added in this GNP. Here only the person, those who are inside the boundaries of country, their income is added, that is the difference. Okay. Equation itself explains as what is the C and what is I and what is G and what is X minus M. Here we will write GDP over here, C plus I plus G. Next we will discuss about the NNP, net national product. Net national product means to produce goods and services, the capital or machines undergo the tear and wear. That depreciation part will be deducted from the gross, then we will get NNP. That means GNP minus depreciation. Depreciation means the machines in the process of production goods and services, producing goods and services, they will get depreciate. We have to replace that machines in later. For that purpose, we are deducting whatever the tear and wear, we will deducting from that gross, then we will get net. Okay. GNP minus depreciation is NNP. Again like that, NDP, net domestic product, GDP minus depreciation. When GDP, gross means total, net means after deducting the depreciation of machines. This is the difference between GNP and NNP and GDP and NDP. Next NNP at factor cost. Here all these so far we discussed at market prices. Here nothing is mentioned first. So, here market prices, according to the market prices. The goods and services which are produced, I mean value of final goods and services which are produced during the year. Here we are calculating the value of goods and services. To calculate the value of goods and services according to the current prices, this year production is multiplied with this year price of that product, we will get value. Like that, this is market price, current price, GNP at market price, GDP at market price, NNP at market price, NDP at market price. Here nothing is there, we did not mention earlier, means that is market price. If we are not mentioning anything over there, it is nothing but GNP at market price. Later we will discuss about the market, what is the market price, what is the best price. First we will discuss about the concepts clearly. Okay. GNP, GDP, NNP, NDP, these 4 at market price. First we discussed about these 4 at market price. Now in market price there are wages, there are rents, profits, interest, like this. These 4 are factors of production, remuneration. Along with this, taxes, the taxes are indirect taxes, direct taxes. Okay. So many things involved in that income. Okay. What are the income received by the factors of production? Total income is not received by the factors. Some part of the income goes toward the government for in the name of indirect taxes. Some part of the income received by the factors of production. Here what is the factors of production, we have to know about it. We have 4 factors of production: land, labor, capital, organization. For land they will take rent, for labor they will take wages, for capital they receive in the name of interest, organizer they receive in the name of profit. These are the remunerations towards the factors of production for rendering their services in the production of goods and services. Okay. Here NNP at market price, that means we calculated the goods and services values at market price. Inside the market price, some part of the income goes to the factors of production, some part of the income goes towards the government in the form of indirect taxes. We should deduct the indirect taxes from NNP at market prices. Whatever the income remaining is there, that should be distributed among the factors of production in the form of rent, interest, wages, rent, interest, profit. Okay. That part is only called net national product at factor cost. Factor cost, what is the amount received by factor cost here? From this we are removing indirect taxes. Indirect taxes nothing but sales tax, like that. Well, while purchasing the goods and services, sometimes government gives subsidies. The goods and services sold at lesser price than actual cost of that goods. That remaining part is covered by government in the form of subsidies. For example, subsidy gas we can take like that. Otherwise, so many subsidies are given by the government. If there is any subsidies, we have to add that. This is not included in market price, so we are adding that. This subsidy amount should go towards the factors of production. Indirect taxes is going towards government, so we are deducted. The government is giving in the form of subsidies. Why it is giving subsidies? Government is giving a support in so many ways. to the poor people to purchase the goods and services, providing them at lesser cost than actual cost. That actual cost, remaining part of the actual cost should be borne by government. So, that is called subsidies. That was given by government. So, we have to add to the price. So, subsidies added into this. Okay. Then we will get net national product at factor cost. Net national product at factor cost is nothing but national income. In India, actual national income means this. This is also national income, this is also national income, different forms of national income. Actual, what is the national income means? What is the amount received by the factors of production in the form of wages, in the form of rent, in the form of interest, in the form of profit. This is the amount distributory shares which factor of production is getting more from national income. Like that we calculate all these things. This is national income in actual sense. In India, national income means this one. From net national product at market price, we are deducted indirect taxes, added subsidies, then we will get NNP at factor cost. Okay. Next, we will discuss about the personal income. In personal income, persons are getting income not only in the form of rent, wage, interest, profit, but also in some other forms also some persons they are getting. All the income is not shared among the factors of production. Whatever the national income calculated, that all should not be distributed among the factors of production. Some part of the income is kept aside in the form of undistributed profits by corporates for the future expansion of the unit or for the future purpose. Some part of the income, whatever the product produced by that company, whatever the income earned by that company, that income is not totally shared among the factors of production who participated in the production, but they kept some part of income as a undistributed profits. Now, we are discussing about the personal income. Person, what income is received by a person, what is the exactly amount is received by a person. Okay. For that purpose, we have to deduct the amount net national product at factor cost. Actually, this is the income should be received by factors of production, but totally it is not received by the factors of production. Some part of income is put aside for the purpose of future expansion, undistributed profits, in the name of undistributed profits by corporates, and some part of income is paid to the government in the form of corporate taxes. Some part of the income in the form of social security contributions. In these three types, they put some income aside for the distribution purpose, for the expansion purpose, for the social security contribution purpose. We should deduct that amount from net national product at factor cost. For that purpose, to get personal income, whatever the income is received by person, to calculate that, we should deduct the undistributed profits of corporates, undistributed profits of corporates, and we should deduct social security contributions and corporate taxes. Corporate taxes is nothing but income tax, like a person paying income tax. Corporates also they pay corporate tax to the government. From the total income which is earned by them, some part of income is paid towards the government in the form of corporate tax, and for a future purpose, social security contributions for their employees or for any other things. Social security contributions, under the name of social security contributions, some part of the income is kept aside. Under these three headings, some part of income is deducted from NNP at factor cost. Whatever the income is remaining, that remaining income can be received by the persons. Along with this income, sometimes government gives some allowances in the form of unemployed allowances and old age pensions, though they are not participating in the production, but they are receiving some income in the form of allowances, pensions, old age pensions, unemployed allowances. All these calls under transfer payments. This should be added to get personal income. Transfer payments is the income which is given by the government to the persons for support them. They are not participating in the production, they are not producing any goods and services. Even though they are not producing any goods and services, they are receiving some amount in the form of transfer payments. Government is providing that allowances to that persons. So, that income is received by the person. So, we are adding to the NNP at factor cost. So, in this way we will get a personal income. In this way we calculate the personal income. That means persons are received this income from NNP at factor cost. This is the national income. From national income, all national income is not received by the all persons. Some part of the national income is kept under the heading of undistributed profits by corporates, corporate taxes and social security contributions. All these will be deducted from the national income and added the transfer payments to this NNP at factor cost, then we will get personal income. Personal income is the amount received by the persons, but this personal income is not ready to spend on goods and services. For that, whatever the amount is ready to spend on goods and services, that is called disposable personal income. Disposable personal income is the amount which is ready to spend. For that, whatever the income received by the person, they have to pay the personal direct taxes, personal tax. That is example for that direct tax is income tax. The person, those who are received some income, they should pay the income tax if they are comes under the category of income tax slabs. After paying that income tax, then only whatever the remaining amount is with them, that is the income which is ready to dispose, that is the income ready to spend on goods and services, whatever they like. Okay. In that manner they can spend that income after paying the direct taxes from personal income. This is the income is called disposable personal income. Disposable personal income. This amount, disposable personal income, spent in the form of consumption and savings. Some part of the income may be spent on the goods and services, which is called consumption, and remaining they may kept in the form of savings. Okay. Disposable personal income is equal to DPI is equal to C plus S, C plus S, consumption plus savings. This is the different concepts. Okay. Later we will discuss one more thing, personal per capita income. Per capita income is the income, average income of a person of one country. Okay. Personal per capita income is nothing but average income received by a person. To get the per capita income, national income should be divided by the population. national income. National income we know about the national income, which is the final value of goods and services which are produced during the year. That amount should be divided by that year's population. Then average one person how much they are getting, that is called per capita income, PCI, per capita income. In this way we can calculate the per capita income. Per capita income explains as the average income received by a person in a country, and that shows the standard of living of a person in country. Maybe that is some persons they may get more than that, some person they may not get that. It is average income, that is not meaning of everybody is getting this much. This is only average income. To get this per capita income, national income should be divided by country's population. Okay. This is the per capita income. These are the concepts. What are the concepts we discussed? GNP, GDP, NNP, NDP, all these are market price. First for market price. Okay. And NNP at factor cost, NNP at factor cost, personal income, per capita income, all these are the different concepts of national income. These are the different concepts of national income. So, this is the market price. Here we should discuss one more point over this. Current prices and base year prices. We always calculate national income in two ways, with the help of two types of prices. One is current price, another one is base year price. Why? Because to reduce the effect of inflation in real income. So, we can discuss one more concept, that is real income, real national income. To get real national income, we use the base year price. Why we use the base year price, we will discuss. Actually, this year production may be more than last year. Even though, for example, prices are declined, because of that the national income will be decreased. Even though goods and services are increased, national income will be reduced because of the prices declined, or sometimes the production is less than last year. Goods and services produced this year is lesser than last year, but prices are increased, doubled. 10 rupees prices became 20 rupees. Then total income may be projected as a double, not a double, but even though production is decreased, but income will be increased. That impact should be reduced. To reduce that impact, we use the base year price. What is the meaning of base year? Means we will take general. In that year there should not be any fluctuations in the prices, there should not be any national calamities like anything disasters should not be in that year. A general year should be, general year prices should be taken as base year. Current base year is 2011 and 12. So many base years are changed since independence. After independence we started this 1949 onwards we are calculating national income officially. National Income Estimation Committee has calculated our national income first time, and so many years has taken base year prices, different years prices have been taken. 46-47 is the first base year, and 60-61, 70-71, 80-81 and 93-94, 99-2000 2004 2005, and now we are latest information is our current new base year price is 2011 and 12. Now we are using that prices. 2 times we calculate the national income, at one way or at one time current prices with current production, in another way current production this year production multiplied with the prices of 2011-12. Every year we calculate like that and compare the difference between these two. In this way we can reduce the inflationary effects, one thing. And one more thing we have to keep in our mind while calculating the national income, double count should not be there. Sometimes the products can be multiplied 2 times or 3 times. Our country economy is divided into 3 sectors: agriculture sector, industrial sector and service sector. One product, for example wheat, take it as example as a wheat produced in agriculture, one time that product is calculated in agriculture. After that it has been packed in the form of powder, atta, that is sold in the industrial sector or service sector, and it is become a chapati. 3 times that product is calculated. Then what is the actual national income is can be exposed as a double, like that should not be appear. So, to reduce the to avoid that problem, the final goods value should be taken of that final good. Why we are stressing on final means the consumption of wheat finally in the form of chapati, we have to take the value of chapati only. For example, sometimes we use that wheat as a seed, that is the final consumption, so we have to take that. Whatever the final shape of that good which is directly used, consumed, that should be taken to avoid the double calculating. Otherwise we will get we won't get actual figures of national income. This is the problem in difficulties in calculating the national income, that should not be calculated repeated. Okay, that one problem we should avoid it. And base year is the reducing the monetary inflationary effect to get exactly value of the goods and services. When we compare with the base year price with current year price, we can notice the effect of inflation. To reduce that impact, base year price index is the real national income. How to calculate real national income is current year national income into base year price index divided by current year price index. Base year price index always 100. For example, will 2010-11, 60 lakhs is the current year national income. 60 lakhs is the current year national income of 2010-11. To reduce the monetary effect or inflationary effect, we will calculate like this into base year price is 100. For example, current year price index is 200. This can be calculated like this, 30 lakhs. After deducting the inflationary effect, 30 lakhs actual lakhs. In this way we can reduce the monetary inflationary effect. To reduce the inflationary effect, we will compare every year with the base year price along with current year price. For this purpose we use the formulas current year national income divided into base year price index divided by current year price index. Okay. They may ask questions on these concepts, may be asked like this: GDP is greater than GNP in these circumstances. GDP is greater than GNP. GNP, when GDP is greater than GNP? When the foreign income is negative. For example, what is the difference between NNP at factor cost and NNP at market price? What is the difference between these two? Difference is indirect taxes added in this market price and subsidies are not there in this. Here NNP at factor cost, here subsidies are there in the NNP at factor cost and indirect taxes are removed. That is the difference between these two. Like that, concept based question, what is the difference between these two, which one is greater than, why it is greater than, like that, and how to reduce the impact of inflationary effect, what is the base price, base year price, and why, which year should be taken as a base price, and how many base price so far used. Like this, they may question, this type of questions may be asked in different ways. Okay. This is the national income concept. National income concept, growth of per capita income depending on the growth of population. If growth of per capita income should be increased, means growth of population should be less than growth of national income. The difference between these two is growth of per capita income. Growth of per capita, whenever growth of per capita income increase, when the national income is increasing, for example, national income is increasing at 5%, population is increasing at 2%, then growth of per capita income is 3%. If it is both are same, then there is no increase of growth of per capita. Like that, they may ask what is the percentage of what is the difference between, what is the relationship between growth of per capita income and growth of population. If population increases, growth of per capita decreases. If population decreases, growth rate of population decreases, per capita income increases. Relationship between these two are negative relationship. If one increases, another one decrease. The relationship between growth of per capita growth of per capita income and growth of population. The relationship between growth of per capita income and growth of national income is positive. If one is increasing, another one also increases. At the same time, that condition should be applied, the growth of population should be reduced. In this way, on concept based question they may ask like this. This is the national income concepts. And what are the determinants? What are the determinants of national income? What are the determinants? Determinants are, determinants means which country having more national income and which country having less national income, why they are having more, why these are having less, that is the determinant factors. Every country's national income depends on the determinants: natural resources, human resources, state of technology, determinants of national income. National income is depending on natural resources. Obviously, which country is having more natural resources, in that country national income will be high. Fertile land is available for the agriculture, then agriculture sector will be dominates, and minerals, coal, different requirement for the industries. If that minerals are available, then industrially that country will be developed. Along with this, if fertile land and minerals are available in one country, these both sectors will be developed. At the same time, automatically service sector is also developed. In this way, one country's national income decides the development of one country. That national income is depending on natural resources, natural resources, quality and quantity of factors of production decides the one country's national income along with natural resources. And state of technology, state of quality and quantity of factors of production decide the one country's national income. Where they are having a quality, that means fertile land and export labor, skillful labor and abundant capital and organizational skills, this leads to development of national income of one country. If any country they are lag behind these 4 factors of production, they will not only register a high national income, but also they quality and quantity of factors of production. Third one is state of technology. One country is having advanced technology, that country automatically increase the goods and services, production of goods and services at a higher growth rate. The country, which country is having lag behind this? If one country is not having sufficient technology and they are not having research and development wing for that particular thing and they are not upgrading their technology, they lag behind it. Because of the state of technology also, national income will be high in some countries, low. And political will, this one is also important to one country to having high level national incomes. Political will, the political the party should govern the country with the stability, and then only they plan good, they make a good plans for development, they implement that plans and they develop according to their plans, then automatically national income will be increased. If in that country there is no stability in the point of view of political ruling, if they are not following proper way to develop their country and political unrest is there, then they won't register high growth rate of national incomes. National income can be determined by these 4 factors. One is natural resources, another one is quality and quantity of factors of production, state of technology and political will and stability of the government. These 4 determinants decide the one country's national income. This is the another one topic in national income, and next we will move to the calculating methods. What are the methods are there to calculate the national income? We are having 3 methods, measuring methods, we can say measuring methods of national income. There are 3 types of measuring methods of national income. One is output method or product method, another one is income method, another one is expenditure method. These are the 3 methods we use to calculate the national income. Output method, in output method we will calculate the total output which is produced during the year and multiply with their respected prices, we will get one value. In this way, product number 1 into price of first good and quantity of first good plus price of second good multiply with quantity of second good. Like that, how many goods are produced in that year, we will calculate like this, Pn into Qn. In this way we will get a national income. This method is called output method or product method. We can say another one name for this, inventory method, and commodity service method, 4 names are there, and income method. Income method in the form of rent plus wages plus interest and profit. In these 4 ways factors of production receive income. Total we are adding the received income along with other mixed income, implicit income will be there. By adding all this we will get one national income. In what way? How much we earned, how much the produce is produced and sold in the market, and what is the expenditure of the total persons of a country. Okay. Expenditure of household and plus expenditure of government, expenditure of firms, expenditure of government. By adding all these, okay, expenditure method. In this way calculating the national income is in these 3 forms. One way is what is the produced and what is the sold in that way. Another one way is what is the income is received by the persons, factors of production, and in one way, another way expenditure method, total spendings. This is the 3 methods we are having to measure the national income. This is the concepts, determinants and measuring methods. Okay. Here I would like to conclude here. Today's topic, it is national income, concepts, determinants and measuring methods.